Welcome to Traders Club market analysis for Sunday 23rd of September 2012. Let's start with a disclaimer. Anything that we discuss here, it's available in a public domain and it should not be seen as an investment or a trading advice. Basically, we're just sharing the information for the benefit of the club members. Let's start the analysis with a couple of charts showing non-confirmation of the prevailing trend or negative divergence, as it's known as well, based on a Dow theory, which says that both instruments, i.e. Dow Transportation and Dow Industrials, should be moving in the same direction. However, what we are witnessing at the moment is that Dow Transportation is moving in a sideways consolidation price range. However, Dow Industrials is moving in a clearly defined uptrend with price action high above rising moving averages, creating higher highs and higher lows. Non-confirmation would call for one of these two instruments to catch up with the other one and therefore confirm. Currently, we can see that RSI, MACD, and stochastics are at the overbought levels at the industrials. SPX or S&P 500 index price action clearly broke out above a rising wedge, prompted by FOMC announcement of QE3. If we zoom in and look at the daily price action with a little bit more detail, we could see that the price action subsequently popped outside upper Bollinger Band and moved back inside, falling back to retest this previous resistance, now newly formed support, which is a dotted blue line. However, red flag is that RSI, MACD, and stochastics are all at the overbought levels. Current support can be found at this rising blue trend line, which is at 1450 level, followed by 1432.64, which is 20 period moving average or a middle Bollinger Band, and 1404.16, which is 50 period moving average and a cluster of this previous low. Current resistance on the upside can be found at 1474.51, and only a significant breakout higher and a daily close above that level could call for higher prices to come. Volatility index is inversely correlated to S&P, and higher S&P prices would mean a lower volatility index or VIX index prices. Current levels are at around 1350, very close to a previous low of 1330 as well. Keep an eye on VIX. Higher VIX would mean a pullback in S&P, which could potentially give us a higher probability long setup for S&P. Alternatively, further softening in VIX would mean that S&P is shooting up higher. There is a huge amount of complacency in this market, and therefore these levels in VIX are very, very low. WTIC or CL contract or NYMEX, American Traded Oil, price action dropped quite a lot on Monday evening trade in Europe or afternoon trade in US. The price actually dropped about $4.40 in a space of 3 to 5 minutes on Monday. And market was buzzing at that time about possibly SPR, strategic petroleum reserves, being released to dampen the prices further. However, that was promptly denied. Subsequently, we had a couple of more days of softer prices, and the price action retraced a full 38.2% from June-July lows of 77.28 to 142 highs. Price action subsequently returned inside a lower Bollinger Band, and stochastics is moving towards oversold territory. Current resistance on the upside is located at 95.74 and 96.47, which is 20 period moving average, and significantly important 200-day moving average, currently colored in green. Alternatively, Support on the downside is located at 88.64, which is a full 50% retracement, followed by 85.83, which would be 61.8 fib retracement. Gold price spiked higher, yet again encouraged by FOMC and Federal Reserve statement about QE3. You can see that the gold price action is clearly retesting a rising 9-period moving average. And it's currently trying to retest the previous high of 1792.70, call it 1800 as a round number. We are currently at the seriously overbought levels in RSI, MACD, and stochastics. Current support on the downside is based at 1762.94, which is this rising orange colored 9-period moving average, followed by 1722.39, which is the previous significant low. Alternatively, if the price moves higher, we should have resistance at 1792.70, and only a significant and a comfortable close above that level on a daily time frame could call for higher prices to come. And final chart for today is US dollar index, or DXY, which is the index that follows the movement of US currency against basket of 5 other currencies. FOMC statement caused a sell-off in that index, i.e. more QE3 means more money printing and therefore softer dollar pricing, and the price action sold off, almost retesting 50% fib retracement from May last year's lows of 72.70 to the current highs of 84.10. The price is currently trading inside a lower Bollinger Band, and all of the overlays and indicators like RSI, MACD, and stochastics are at the oversold levels. Current resistance on the upside is it's located at 80.35, followed by 80.70, which is 20 period moving average and 200 period moving average. Alternatively, support on the downside, it's located at 78.27, followed by 76.80, which is also this fairly significant rising support trend line. 8 minutes so far. Hopefully you enjoyed it. I've tried to keep it as quick as I can. Any comments? Welcome. Thanks. Bye.